Ladies and gentlemen, good day and welcome to Infra Engineering Limited Q3 FY'24 earnings conference call hosted by Go India Advisors. As a reminder, all participants' lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Sana Kapoor from Go India Advisors. Thank you and over to you, ma'am.
Thank you, Manuja. Good morning, everybody, and welcome to Infra Engineering Limited earnings call to discuss the Q3 and 9-month FY'24 results. We have on the call Mr. Harendra Singh, Chairman and Managing Director, and Mr. Rajiv Mishra, Chief Financial Officer. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that the company faces. May I now request Mr. Harendra Singh to take us through the company's business outlook and performance, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Sana. Good morning, ladies and gentlemen. Welcome to the earnings conference call of Infra Engineering Limited. We are delighted to discuss the key milestones of our quarterly and 9-month financial performance, other accomplishments, and future vision. We trust you got the chance to examine our investors' presentation and the financial results. Let me start with a brief overview of the infrastructure outlook and the latest budget updates. The Ministry of Road Transport and Highways has received increase of funding 2.7%, totaling around 2.78 lakh crore rupees for 24-25, out of which 1.68 lakh crore is designated for NHAI for development of national highway corridors. The government plans to accelerate new project awards in the upcoming months and also reviving build-operate transfer model with 54 projects worth over 2.2 lakh crores. Additionally, there is a shift from Bharatmala Pariyojana to Vision 2047 initiative, a more ambitious plan aiming to construct 30,000 to 35,000 kilometers of access control highways and 50,000 kilometers of high-speed corridors before India's 100th independence anniversary in 2047. In the railway sector, the interim budget 2024 has earmarked rupees 2.55 lakh crores, sustaining its capital expenditure momentum compared to the rupees 2.41 lakh crores allocated in 23-24. Indian Railways envisage a substantial 4.2 trillion plan to multi-track 7 high-speed density corridors spanning 10,969 kilometers over the next decade. Under the Amrit Bhala station scheme, the government has planned to remodel 1,309 stations by 2030. Infra has taken this as an opportunity considering new bidding in various station projects and already acquired Kanpur railway station. We aim to secure high-value projects in this sector. Recognizing opportunities in different sectors, we have actively pursued bids to broaden our order books. Let me start the journey of this quarter and give you the glimpse of operational highlights first. As of December 2023, our order book stood at Rs 9,626 crore, diversified across 11 states. Out of the total order book, EPC constitutes 51%, HAM constitutes 37%, and Railway and Metro contributes remaining 12%. Talking of the ongoing projects, the execution progress on various EPC projects is as follows. The Ganga Expressway project is progressing well and has reached a completion milestone of approximately 42.1%. In the Delhi UER project, substantial progress has been achieved and standing at around 84.8%. It is anticipated to be completed by March 24. Nelamangala-Tumkur project is advancing smoothly and has attained an execution status of 19.1%. Karnal Ring Road project has achieved 10% completion and progress is well accelerated in the next few months as all initial impediments in the progress has been addressed. The progress of all HAM projects is also running as per the planned schedule. The update is the Raipur-Visakhapatnam OD5 project has progressed to 54.8%. Raipur-Visakhapatnam OD6 project is currently at 62.4% completion. The Raipur-Visakhapatnam AP1 project has achieved a completion status of 61.3%. In the Navas-Devrapalli project, package 1 has progressed 33.6%, while package 2 is at 38.4%. Let's dive into the progress of our railway projects. The DMRC metro project has achieved a completion of 36.7%, with execution progressing smoothly and in line with the expected timelines. The Bilaspur Himachal Pradesh railway project under RVNL, though it delayed a bit initially because of extensive rains in Himachal, is now progressing well. The Kanpur Central Railway Station project, which North Central Railways, has reached a completion of 1.2%, just recently started. Let me now share other significant updates of Q3 FY'24. The appointed date for Kanpur Central Railway Station was received on 16th of October 23. The PCOD of Maharashtra Package 7 and Rewari bypass were received with effect from 29th Feb 2020 and 25th May 2023 respectively. COD of Rewari Ateli Mandi was received with effect from 31st November 2021. Financial closure of Varanasi, Ranchi, Kolkata Package 10 and 13 was declared on 23rd November 23 and 20th November 23 respectively. In terms of the financial highlights of this quarter, we are happy to share, considering our financial performance and robust growth story, the outlook on the long-term rating has been revised from stable to positive. The rating committee of ICRA has reaffirmed the long-term rating at AA- and the short-term rating as A1+. Our financial numbers of last quarter has been satisfactory. At the standalone level, our total revenue for 9 months FY'24 has reached 3,487 crore, marking an 18.3% year-on-year increase from rupees 2,949 crore in 9 months FY'23. EBITDA amounted to rupees 557 crore in 9 months FY'24, resulting in an EBITDA margin of 16% compared to rupees 473 crore and a 16% margin in 9 months of FY'23. PAT for 9 months FY'24 stood at 386 crore with a profit margin of 11.1% in contrast to 274 crore and a margin of 9.3% of 9 months FY'23. In Q3 FY'24, standalone revenue reached rupees 1,346 crore, indicating a significant 19% year-on-year growth from rupees 1,131 crore in Q3 FY'23. Standalone EBITDA for Q3 FY'24 was rupees 214 crores, reflecting a year-on-year growth of 13.2%. The PAT margin for Q3 FY'24 stood at rupees 205 crores and 15.3% respectively. Compared to rupees 111 crore rupees and 9.9%. Regarding the company's debt position, on a standalone basis, the gross debt amounting to rupees 470 crore, including the working capital debt of rupees 64 crore rupees, term loans, current maturity, and trade limit totaling to 341 crores, along with the NCD of 65 crores. Moving on to the consolidated numbers, in 9 months FY'24, the revenue surged to rupees 670 crore, indicating an 18.9% year-on increase from rupees 3,087 crores in 9 months FY'23. EBITDA reached rupees 729 crores, resulting in an EBITDA margin of 19.9% compared to 598 crore and a 19.4% margin in 9 months FY'23. PAT for 9 months FY'24 stood at rupees 349 crore, with a profit margin of 9.5% as compared to 322 crore, a 10.4% margin in 9 months FY'23. Concerning the company's debt position at the consolidated level, the gross debt amounting to rupees 1,356 crore. The total equity requirement for 9 HAM projects is estimated to be rupees 1,331 crore until FY'26. As of December 23, rupees 604 crores has already been infused, and there is a projection infusion of rupees 74 crore in FY'24. Let me now give updates on the key developments on the monetization progress of 4 assets. Pursuant to entering the share purchase agreement on 3rd May 2023, we have finally achieved the milestone of completion of first tranche sale of 3 SPVs, including Gurgaon Sohna, Rewari Ateli, and Ateli Narnaul. 100% shares of these companies has been transferred on 21st November 2023 from HG Infra to Highway Infrastructure Trust, and consideration has been received against the share transfer. As per SPA, total consideration offered was rupees 531 crore for all the 4 SPVs. Out of that, agreed consideration for first tranche of these SPV was rupees 405 crore, against which the final total consideration has been closed for rupees 375.16 crore. Total consideration includes 313.07 against equity and 62.06 crore against subordinate debt. Entire consideration has been received except holdback of rupees 59.56 crore being transferred in an escrow account, which will be released on receipt of approval for GST change in law on annuity payments from the authority, and the same is expected to be received by March 24. We further would like to inform the variation in final consideration was majorly due to change in the price escalation amount on account of impact of change in law, a change in CPI guidelines. Because of this change, there was a negative impact of around 13.29 crore on the consideration value of these 3 SPV companies. However, the impact is positive in second tranche of 4th SPV with 2.87 crore. Additionally, during the period before closing of transaction within the agreed valuation dates, unsecured loan of rupees 16.7 crore rupees was refunded back to the promoter company, which was provided to SPV during the construction period as interim arrangement in general course of business. However, in Rewari bypass, we would like to receive rupees 140 odd crore rupees against consideration of rupees 126 crore as per the SPA. Thus, overall consideration remains unaffected. Also, we would like to update that for second tranche of 4th SPV, that is Rewari bypass, where PCOD declared with effect on 25th of May 23. Accordingly, we have applied for the issuance of NOC from the authority and lenders for the change in shareholding. Final NOC is anticipated shortly, and we are expecting to complete the second tranche by March 24. On completion of first tranche transaction in November 23, rupees 106.74 crore of total capital gain has been recognized, which attracts a tax of rupees 16.09 crore as per the income tax provision for the first tranche. 3 SPVs due to which the overall current component has increased for this period. Let me now touch upon the future guidance. After the lukewarm awarding this financial year till now, we are expecting aggressive bidding in the next 2 months, which will give us the opportunity to augment our order book. To date, HG Infra has bidded for 52 tenders worth 30,572 crore until January 24. Among these, three tenders were awarded, totaling 1,199 crore, including projects of NTPC, Central Railway project of Dhule to Nardana, and South Central Railway project of Aurangabad to Ankai, Package 9. Both the railway projects have been awarded in the month of 24. I am hopeful after the addition of 2 railway projects in the month of January 24, we would further add 5,000 odd crores more projects in the remaining part of this financial year, taking total order addition during the year to around 6,000 crores. For future bidding, HG Infra Engineering also plans to bid on about 8 more railway projects, that is around 6,000 crores this financial year. We are also targeting high-value railway projects as invited by Haryana Orbital Rail Corporation to further diversify order. We have started preparatory work of analyzing cost and doing preliminary discussions with diversification in solar sector, also to propel our way forward. Regarding the revenue guidance in this 9 months, we have attained the revenue of rupees 3,487 crores, and we would like to assure all our stakeholders that this year we will be achieving 17 to 20% growth in revenue compared to last year, maintaining a margin of 15.5%, 60% flat. I want to ensure our shareholders and the financial partners that the company is exercising prudence and vigilance to enhance our growth narrative, demonstrating persistence in seizing forthcoming growth opportunities soon. We are meticulously focused on enhancing our operational efficiency and execution capacity to boost both our EBITDA and PAT margins. Digital transformation holds a primary spot on our agenda, encompassing automation in our all plant and machinery operation and various other verticals. The strategic move is poised to contribute significant value to our financial indicators, fostering a seamless and transparent real-time working environment. That concludes my update, and now the floor is open for question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Alok Deora from Motilal Oswal. Please go ahead.
Good morning, sir, and congratulations on pretty decent numbers and execution improvement. Sir, just again on the although you gave a pretty detailed opening remark, but just on the order flow, because we are already clocking nearly a run rate of 5,000 crore annual revenue, and order book is at around 2 times now. So, how many projects we have bid now where bids are yet to be opened? And you also mentioned that there is a pretty aggressive bidding which will happen in the in the next couple of months. So, what's the realistic number we could look at? Because most of the companies are betting on these next couple of months to kind of get the order flow in place.
Yeah, sure. I say almost 16 bids are there where yet the results are yet to be declared, and this is totaling of about 14,000 crores. Apart from this, as we have seen that in February and March, prior to the Model Code of Conduct imposed, likely that the awarding at NHAI, Ministry and MSRDC and several railway projects, they are on the card, where we are also betting upon it. And definitely it looks like that during the next 2 years, quite a good pace of awarding would be done. And it's almost 70,000 odd crore rupees, or rather 60,000 to 70,000 in MSRDC, all EPC projects, and around 50,000 crores plus at NHAI, and almost 40,000 odd crores from the Ministry. So these are the highway projects which I am talking. Other than the railway projects are also there. So which we believe that definitely 25,000 odd crores of railway projects is likely to be awarded.
Sure. And I think in your comments you mentioned about you bidding a lot of these railway projects. So what is the expected margins there? Because railway margins will be lower than this 15-16% margin which you make in the road projects. So what is the margin profile would be there for those projects?
So we are keeping the same thing. Say if you are talking of the Dhule project, there's almost the similar kind of a project as highway. Say nothing of electrification or S&T. So we are keeping the same margins as we are doing in highway. Definitely, it can be not more than 1%, because in highway EPC project we are keeping ourselves at about say 13% range. That we are keeping for them. HAM definitely we are targeting about 18-19% as we have done in the past. So this is how we are looking at any future railway project to be bidded.
Got it, sir. That's all from my side. Thank you and all the best, sir.
Thank you.
Thank you very much. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you and congrats on a decent set of numbers. So just to dwell upon that, so till now, the railway orders, the EPC value for us is 1,200 odd crore that we have received?
The recent orders which we have received.
Yes, sir.
So net of GST, it would be around 1,100.
Okay, net of GST. So till now, the order inflow for us is 1,100 odd crore, and for full year, so by next 2 months, we are looking at further 5,000 odd crore. So total would be a 6,000 odd crore that we are looking at.
Yeah.
So in this 5,000 odd crore, railway would be how much more we are looking at?
So we cannot just see that we already has bidded for almost 14,000 odd crores of bid yet to be awarded. In this 10,000 crores are all railway projects, which we expect that definitely 1 or 2 projects from railway is likely to be there out of this 5,000 expected during the balance part of the year.
Okay, so this 10,000 crore railway projects, so these are closer to 1,000 crore each kind of a project?
No, it's not typically the same. It is 500 to 700 and 1,000 or even 1,200, 1,300 also.
Okay. Got it. So, for the full year, you mentioned 17 to 20%, so slightly maybe a lower revenue that we are looking at versus the previously 5,400 crore. So for next year, in terms of 6,200 crore revenue that we were looking at, so are we able to maintain the same guidance for FY'26?
So for the current year, definitely because of the very weather condition and the erratic monsoon. So this is why the shortfall has been, and the Jharkhand project which we were supposed looking at this appointed date of package 13, which is yet not clarified as far as model code of order likely to be imposed. So this is why the shortfall of about 200 odd crore rupees likely to be there. But definitely we are keeping the target intact for the financial year 25 with 6,000 odd crore rupees.
Okay, got it. So now these two appointed date, package 13 and package 10, so when can we expect the appointed date?
So looking to the current scenario of Jharkhand, the state government, as well as the model code of conduct, we believe that till May definitely no chance is there. And we also would not be taking this risk prior to this. Only one project which we definitely would be looking at by June, appointed date can be there. The second project, as I am expecting that post-monsoon, that would be declared.
So package 13 will be by June?
Yeah.
And package 10 will be of October, November?
Not November, rather August onwards, say sometime in September.
Okay, got it. Sir, you mentioned significant opportunities in railway, MORT, NHAI, MSR, DC. So out of total, how much are we planning to bid? If you can broadly help us, then it would be a great. So 30,000 crore that we will be bidding?
Roughly there are 60,000 crores of bids which we are aiming at to be bid in these three organizations.
Okay, got it. Sir, couple of data points on the balance sheet side. So first is retention money, unbilled revenue, mobilization advance.
The mobilization advance is 308 crore rupees, to be very specific, and the total debtor is 825, including the retention and deposits, other deposits. And that is, if we want the breakup, NHAI is around 140 crore rupees, SPVs are at about 250 crore, Adani 300 odd crore rupees, as we have done significantly good in month of December. That is the same for the month of December only. And others are very negligible at 135 crore rupees. Unbilled definitely around 700 crore rupees, and the 700 crore is unbilled of 250 from NHAI. And Adani is very negligible of 100 crore rupees. The SPV again is 300 odd crore rupees. And remaining are others.
Okay, sir, yeah, total debtors you out of that retention money is how much?
Retention money is around 115 crore rupees.
115. And total inventory and total debtor value is how much?
Say inventory has gone high, it is 341 crore rupees. What are you talking about?
Total debtors.
The data we have already discussed, 825.
825. And payables, sir?
Creditors.
Payables.
Sorry?
Payables, sir. Creditors.
Creditors, no?
Yes, sir.
Creditors are around 600 crore rupees.
600 crore.
Yeah.
Okay. So, and
Sorry
just for
to
the
interrupt,
clarification.
Shravan.
Okay.
Can you
Okay. I was
rejoin
taking
us?
the point out. Okay, no issues.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. Thank you. The next question is from the line of Nikhil Abhyankar from ICICI Securities. Please go ahead.
Thank you, sir. Thanks for the opportunity. So my question was broadly regarding, we have seen that the pace of capex increase for NHA has reduced as well as for railways, and going forward, maybe to reduce the fiscal deficit, the capex might reduce as well. So do you expect higher share of BOT going forward, say in the next 3 to 5 years, and how will we try to participate in that opportunity?
Sorry, I couldn't understand your. Please, you can repeat it.
Sure. So right now, as compared to HAM and EPC, going forward, there might be higher share of BOT projects from NHAI.
Understood. So definitely NHAI having, looking to the response of many of the lenders as well as concessionaires, where the TOT they could monetize. So looking into that, they have figured out some 50 plus project of 2 lakh crore rupees on BOT model. And where certain concession agreement has been modified, which is quite friendly, which we believe is a positive move. And I don't know how it will definitely react on actual bidding being or rather than awarding. But then definitely looking to this opportunity, as we are working with Adani, we have already worked with IRB. And Adani and IRB, they are the one who are very, always try to take such kind of a projects. And apart from this, Cube and one or two concessions, they are also approaching us. So they are also approaching HG as a EPC player to them. So with that, I think this opportunity, if definitely with the government's stand likely to come, we would not be at a risk. We would be again looking into such opportunity from the perspective as a EPC to the developers.
Okay, so we are not looking to participate directly.
We would be taking trial of 1 or 2, not with very aggression, with very own numbers, keeping our own numbers.
Understood. And sir, what will be the margins on this profile? Usually, what is the margins for BOT projects as compared to HAM and EPC projects?
No, the BOT projects and HAM projects, they are all same as far as EPC is concerned. If you talk of the development, so the project being taken by the concessionaire, they do have definitely consideration in toll risk is there, or in HAM there is no risk as such. So there's their calculation. The financial model calculation is different.
Okay, sure. Thank you, sir. That's all from me.
Thank you very much. The next question is from the line of Jiten Rushi from Axis Capital. Please go ahead.
Good morning, sir. Congratulations on good set of numbers. So my first question is on the deal, as you said, what I understand is...
You can speak a bit louder. Yeah.
Can you hear me now? Okay. Is it loud now? Hello?
Yeah, now it's okay. Yeah.
So my question was on the equity investment in the 3 HAM project in which we have completed our monetization. So I'm assuming we have invested around almost 268 crores, against which we were supposed to receive 405 crores, which you said, but we have received 375 crores. So sir, in this 375 crores, 59, so almost 60 crores is still pending, right, sir?
Yeah.
This 60 crores is related to GST for the change in law. which you will receive by end of month once NHAI approves it. That is what my understanding is, right?
Yes.
So, sir, we have made a capital gain of almost 107 crore, while that is in the standalone. That is correct, right? Because overall you said 117 crore, which is including the Concall number, standalone plus Concall. Hello.
Yeah, quite right.
So, sir, what was you said some negotiation is going on. So, what is that negotiation like, which has impacted the valuation? So, what is the reason of the impact in the valuation in the first 3 projects?
So, see, this is the entire deal has been for all 4 projects. The individual project do not have any impact on it. Looking to that, say I already have addressed because of the CPI. So this is a consumer price index where the later on guidelines being issued by NHA for calculation of the price index, price escalation rather. So there is an impact of about 13 crore rupees, which is the net impact of 10 crore rupees, taking consideration of Rewari bypass as well. So net is 10 crore rupees, but in Rewari bypass, looking to the equity which we have invested and the likely proceeds or likely NVT which will be getting in next 15 years, with all consideration, this 126 crore rupees initially being considered in this overall valuation of 531, where it has now, it would be 140 plus. So this is 13 crore rupees plus in that particular project. So overall, the overall 531 crore rupees are intact. So we are not going to lose anything out of that. It's a matter of first tranche or second tranche. And having discussed that, definitely the capital gain which we have considered in this HG standalone and the consolidation which we have seen that these 3 projects, there certain discounting is to be done in that in the profit margins, which actually has impacted the consol number.
Okay. So that's the balance number that comes out. Okay.
Yes.
And sir, so any capex for 9 months and what is the guidance for full year FY'24-25? And what is the balance equity breakup, if you can give us, like you said, for 74 crore in Q4 this year, and what about the balance 604 crore, how is broken down after the 604 which you have invested so far?
So post this, say now out of this 1,331 crore rupees, 1,331 crore rupees, 601 crore already done till 31st December. 730 is the balance, and this 74 which we have considered for the quarter 4/24. 465 is the number which we are considering for 25, and 196 crore is the balance which for 25, 26 or 27, accordingly when Jharkhand projects appointed date is declared. So this is about equity, and as far as execution is concerned, for sure we are looking at this current year to be closed at around say 5,200, that is rough number. And for 25 we are keeping a guidance about 6,000 crore rupees.
The capex so far, and what is the targeted capex for FY'24-25?
Capex would not be a big number for the subsequent years. Capex hardly would be in the range of 75 crore rupees.
And this year?
Sorry?
FY'24?
This year already it is done. Nothing else more to be added.
So almost like you have done more than 100 crores, what I understand.
Yes.
Okay, sir. I have more questions. I will come back in that. Thank you.
Okay, thank you.
Thank you very much. A reminder to all the participants, you may press star and 1 to ask a question. Thank you. The next question is from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Good morning, sir. Sir, just to confirm, so this year we are expecting 6,000 crore order inflow, and what should be the expectation for the next financial year, FY'25?
Sure. I think for this current year, what we have initially has guided are also 8,000 crores to be added. And if we are at that stage where nothing big as being achieved as far as awarding is concerned across infrastructure, especially NHAI and highway projects are concerned. So we believe that whatever bidding pipelines they are having post this election, there will be not many projects as an opportunity would be available to us. So with that, we are expecting about, say, 8 to 10,000 crores being added next year.
Understood. And just to confirm on the number for railways, so you said HAM EPC 18-19%, highway EPC 13-14%, EPC is 13-14%, and railways are at what margin, sir?
They are almost similar, which we are keeping for EPC highway, that is around 13%. We are keeping the same number.
Okay. So with this mix change, do you expect the overall margins to come down because we are getting much more in railways?
No, it's not that big number of railways. It's just around 18-20%. And for highway also, EPC project which we were doing earlier was constituting this much. It is a replacement of NHI EPC projects, or rather highway EPC project by railway project. So the margin definitely would not be impacted much.
Understood, sir. And sir, now if I look at your overall P&L, so of course we have broadly maintained the EBITDA margin if we look at 9 months and all. But what is happening is below the EBITDA, we are using maybe much more of our own equipment. So that is, we are paying less to maybe on the lease side, but then, all those costs are hitting us on the depreciation and interest. And those have increased a lot, much more than revenue growth, 50-60% growth. So because of which the overall PAT is not increasing, maybe 7-8%, and this quarter would be flat YOY or 2-3%. So, despite a very healthy growth, 17-18% on the top line, it's not impacting our bottom line. So how do you see that, sir?
I think the PAT is at the standalone level. You can see the PAT is around, say, 9.5 to 10%. Say, with that, whatever interest outflow is there, it's now stable. Say, as a percentage, you can see last 2-3 years, interest not increasing to that extent, and the depreciation definitely in the recent quarters has been increased. But for sure, I think it's a part of cash accrual. So we don't believe, we don't see any challenge as far as PAT is concerned. It would be in the range of about 10%, and it can even go up to 11% in the coming quarters.
So going forward, our finance cost, let's say as a percentage of revenues, etc., do you expect these costs to normalize further, or, this is the new normal? How do you see it? Because this has increased almost 70% on a YOY.
Finance cost is roughly finance cost is currently around 15 crore rupees, and this per quarter. So if we are talking 60 to 65 crore rupees of finance cost, which is likely to be stable, and nothing more to be increased. Only depreciation, which has now, earlier it was 25 crore rupees per quarter, now it has gone up to 36 to 38 crore rupees. So which is a big number. But definitely, it's with the in the coming years, the capex is not going to be at that high level.
Okay, so this is not driven by any change in our model as such, wherein now we are doing more of these equipments on our own, because of which even while seeing lower margins, we are maintaining EBITDA but falling in terms of the PAT margins.
No, nothing has been changed.
Okay, sir. Okay, sir. All the best for the coming quarters.
Thank you.
Thank you very much. A reminder to all the participants, you may press star and 1 to ask a question. Thank you. The next question is from the line of Mehul Mehta from Nuvama PCB. Please go ahead.
Good morning, team. Thanks for the opportunity. We have been exploring possibility to bid for underground metro rail projects. So has there been any progress in terms of JV with any organization?
We already have tied up, but as of now, we could not see any project where this could be explored. We already have tied up for the tunnel projects, for metro tunnel projects rather. But for sure, we are not very aggressive as far as with the coming opportunities in highways and in railways even high-speed density network corridor to be developed, where the viaduct construction and the DFCC corridor to be constructed. So we are keeping this, but not very aggressively.
Achha. As far as you have been focusing on, I mean, maybe though on railway and road projects, but in metro, say if we look at out of operational metro network of about 800 kilometers and currently about 650 kilometers under construction, would you be sharing who are the major players
Metro, definitely we have seen the L&T to a very high level, and J. Kumar is there, then FCOM, and then ITD. So they are the one, say 5-7 or the big numbers, big players. They are having 70% of the entire metro construction.
Okay, and say out of the proposed network of about 1,000 kilometers, are there new players entering, or to be on the similar players who have been so far in this segment?
In metro projects, mostly the capex being done for the casting yard and everything. So in these cities where already they are set up, having the setup, so they would be having at least advantage of taking this opportunity. But for sure, in the upcoming tier 2 cities like Agra, talking of Nagpur, even Kanpur, and there are many more cities, the metro Bhubaneswar, to be very specific. So there I think this opportunity lies where the players like AG, the other players, other companies would be interested.
All right, sure. Another question is in relation to working capital cycle. If we look at FY'23 and we had about 23 days working capital cycles, net working capital cycles, and currently it is at about 34 days, and which has been mainly driven by 51 days of inventory cycle. So is it that going forward we can see this reducing, or we should continue with maybe about 30 plus days?
From the start of this last 3-4 years, we have seen the trend of about, say, 35 odd days. So it's not crossing 40 limits. So 30 to 40 days is the ideal one where we have seen this inventory going higher. Because if you can see these are the current months. In these months, high construction is at a very high pace. So because of that, the inventory is a bit high. But otherwise, the inventory more or less would be around, you can see of the top line, around 8 to 10% of the inventory would be there, not more than that.
Okay. But as far as this FY'23 was an aberration in terms of 23 days of working capital cycle?
No, it would be coming back to the same 30 or 35 days. This is a normal trend for the working capital. See, because of some unbilled and because of some data receivable at SPV, say at the end of December, so we have not taken the funds from SPV, from the lenders to SPV and to EPC to EPC. So that is where the SPV debt has gone high.
All right. Thanks. I'm done.
Okay.
Thank you very much. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we will request you to rejoin the queue. Thank you. The next question is from the line of Parani Vijay Kumar from Avendus Spark. Please go ahead.
Yeah, good afternoon, sir. You had mentioned in your opening remarks that you are looking to diversify also into solar projects. Can you highlight what are our target projects and what are our scope of work that we are trying to do here?
In the solar, the renewable energy, government focus is very specific in the state of Rajasthan, which is the best state to set up. So we have explored some of the projects in Kusum Yojana. Not big projects are there, very small projects where the tariff is good and power purchase agreement with the government is being done. So not going very aggressively, taking some opportunity in that project where doing EPC at HG level only, rather than getting it done through any other contractor. So this is basically start with the learning and doing with a secured model of where the tariff and is good and the power purchase agreement being executed with the government only.
Okay, so as as a capacity of a developer, you mean? Like we will be building these projects as a developer.
We would be entering not only into EPC, we would be entering as a developer, but not very high value projects, very small. To start with, it would be roughly around, say, 100 odd crore rupees project, but later on within 6 months, if we feel like 100 odd crore rupees can be added. So this is where we are looking into this opportunity.
Okay. My second question is on, in your opening remarks, you mentioned that this Bharatmala is being converted into Vision 2047. So what is the progress of this? What is the thought process of the ministry behind this? Any more details that you can provide? Like you mentioned, there's a 35,000 kilometers and then there's another 50,000 kilometers. So if you can elaborate more on this.
See, the government is looking into 2047 as the year where 100 years marked for this independence. So with that, I think government vision statement where every organization, it can be highway to railway, they all has been given the task where consolidation of infrastructure development or to be done in this 23 years rather. So with that, we believe that the coming opportunity would be, as earlier we were looking at 28, 29 or 30 rather, this highway opportunity would be dried up, likely to be dried up rather. So now they are given this indication that highway also would be there in our cards. And where we are expecting, say, 50,000 kilometers of the existing national highway to be upgraded and some 35,000 kilometers to be awarded on the access control greenfield highway. So this is a vision document where detail of the project has already been excised. And I think it will take another 6 months or 1 year down the line when the clarity would be, more clarity would be given, rather available. And then I think bidding in the coming year, say 24-25, would be in these projects only.
Okay, understood. Little long-term kind of opportunity. Okay, got it. Thank you for answering my questions and all the best for the future.
Thank you.
Thank you very much. The next question is from the line of Vaibhav Shah from JM Financial Limited. Please go ahead.
Thanks for the opportunity. So when do we expect to receive the proceeds for the fourth asset?
So likely to be by end of this financial year, by March, because it is already at the advanced stage with lenders and NHAI. So within next 10-15 days, we will be likely to get this NOC, and then another 35 days for completing entire formalities.
And the receipts we received for the three assets, so where has the money been used? Because our debt is reduced by around 127 crores on a quarter-on-quarter basis, and cash is flattish.
So cash definitely is around 70 odd crore rupees. We can see that as the payment likely to be, which we like always receive from our SPV through lenders funding. So which we definitely keeping a cash at the company level, we are again looking into this particular arrangement where we will not be taking the, let's say, loan from the lenders to SPV and SPV in turn to EPC. So there's one way we are looking. Again, we have now looking into some part of this fund to be used for an advance payment procurement. Advance procurement from the vendors. So we are getting around, say, 1.5% cost benefit where the cash discount is being there. So there are few other models which we are excising where this cash with the company can be used, and definitely on OD limits or such only current account definitely would not be there. We will not be keeping our fund into this current account, but then OD limits would be all say free from utilization use.
So currently where it is sitting on the balance sheet?
Sorry?
Currently where the cash is sitting on the balance sheet, the receipts we got from the monetization?
Majorly, which I have seen, 270 odd crore rupees, which are likely to be, which are kept as a debtor receivable from SPV. So this we have done intentionally. We have not taken in SPV. So this would be reducing the interest during construction to the SPV.
Okay, got it. Okay, thank you, sir.
Thank you very much. The next question is from the line of Vishal Periwal from IDBI Capital. Please go ahead.
Yes, sir. Thanks for the opportunity.
On the railway side, sir, the two different sort of work that we are doing. So relatively, where do we find the margins to be better? That is for station redevelopment or the new line that we are constructing for Bilaspur?
No, Bilaspur is totally different project. Bilaspur project is all viaduct construction. See, it's in the backwater of dam where the station and this viaduct being developed. These railway projects are all different. 50 odd kilometer broad gauge new line to be laid of 700 odd crore. This is Central Railway project. In South Central Railway project, 447 crore. That is say second line or say the third line being developed as a broad gauge line. These are all new lines or the lines which existing, nothing is to be touched.
Okay. No, but then if I look at order book, so the Kanpur work that is there, station redevelopment, and then there's the Bilaspur work that is there. So relatively, where do you find the margins to be better? Like on
Kanpur, definitely, as we have done, we are doing our all pre-bid, pre-bid to post-bid comparison, post-design. So we are seeing the good margins are there in Kanpur railway station if we compare with the railway project of Bilaspur.
Okay. And then will it be possible to give some number, like relatively how much better it is? Any ballpark range that you like to share?
But right now I'm not having handy with me.
Okay. Sure, sir. Yeah, that's all from my side. Thank you.
Okay.
Thank you very much. The next question is from the line of Pratik Bhandari from AART Ventures. Please go ahead.
Hi, good morning, sir. Hello?
Yeah, good morning. Yeah.
Yeah. So I wanted to know as to the exact number of order inflow in the Q3 FY'24, the recent quarter. What was the exact amount of order inflow?
In Q3, hardly there was any orders being entered. Only NTPC 37 crore rupees of new order. There is some variation, some change of scope, variation being awarded by the authority. Like in Ganga, we have received variation of 100 crore rupees. In some of the projects of NHAI also, they have variation which, that's why the price escalation also has contributed to the top line. 131 crore rupees of price escalation also has been there.
Okay. So if I talk about 9-month FY'24, I mean like this current year up till December, what was the order inflow in the 9 months?
In the 9 months, hardly there were order about 75 crore rupees, both NTPC small projects, but the variation orders of about 300 crore rupees being passed by various authorities. So that is one. So you can see all compared 12,700 at the start of the year and say having say 9,600 at the end of this year. So the difference is almost 500 crore rupees. This is because of price escalation variation.
What was the major reason for no order inflows in the 9 months FY'24?
As it is all where I think say NHAI awarding and say highway awarding and other sectors because of the state election also, not much awarding was done.
Okay, so there is no awarding from the organization, right?
Yes.
Okay. Thank you.
Thank you very much. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Hi, thank you for the opportunity again. Sir, these two new railway project, when we will be getting the appointed date?
One of the railway projects, LOA has been received 2 days back only, 700, one of Dhule project. So which we are checked upon with the authority said that within, I think, 3 months, likely that the appointed date would be declared because the land is available with them. And the second project, definitely, it's a third line to be developed along with the existing line. The ROW is available. So within very soon, we would also be getting the appointed date. So probably by April, both the projects appointed date likely to be declared.
Oh, okay. So by April, both the appointed. And sir, if you can again repeat the equity infusion. So 74 crore we will be infusing in fourth quarter. And in the FY'25, we said 465 crore.
Yeah, that we have kept 465 crore looking into the both Jharkhand projects requirement and all 5 projects which are, or rather 6 projects where the balance equity requirement would be there. So that 70 from 55-60% already invested, taking to 75%.
Okay. And so total balance requirement is 730 odd crore till today. 604 crore we have invested, 730 crore is to be invested.
Correct.
Okay. And in the fourth quarter, when we'll receive the entire monetization, the fourth project, the second tranche, so how much gain post-tax we will
Sorry
be...
to interrupt, Shravan.
I think what you are saying that what 140 odd crore rupees which we will be getting and 60 crore rupees which is lying in the escrow already being, effect has already been considered in the balance sheet. So there is one fourth project transaction to happen, and for sure I think whatever tax is there, as far as the Concall and EPC is there, this is a calculation to be done once the transaction being done.
Okay. And debt level will further reduce from here on?
Yeah, definitely. We are keeping that about, say, debt level would be roughly around, say, 400 crore rupees from now, and debtors, but say majorly effect would be in the debtors.
Okay. So as you mentioned that you have kept the money, whatever we have received to fund the SPV, so that the interest during construction is on the lower side. So SPV debtors are on the higher side. So that's the major reason. But broadly, in terms of the working capital days, it will be back to the normal 30 to 35 days. Will come back to the normal level.
Quite right. Yeah.
Okay. Thank you and all the best.
Thank you.
Thank you very much. The next question is from the line of Jiten Rushi from Axis Capital. Please go ahead.
Yeah, thank you for taking my question. So my first question is on the, as you said, during 9 months, you had bidded for almost 30,507 crore project, of which you are able to win 1,200 crore. Our win ratio is almost 3.5-4%. And now we are targeting, there is a 14,000 crore open pipeline, which the bids are yet to open, and another 60,000 crore which are going to bid in roads, and 6,000 crore in railways further. So almost 80,000 crore is kind of a bids which we have bidded, like 14,000 plus the new bids. So with this 4% win ratio, inflows can get anything between 3,500 crores. So then, as you said, like we are targeting around 5,000 crore more inflows. So do you believe that we will be going aggressive to win the project?
I understand your question. The bid strike ratio normally depends, sector to sector. In railway, we are bidding many projects rather than only selected projects. In the highway, we usually are taking a few selected projects to be bid, and that's why the bid strike ratio is better in highway projects.
So how much? So basically, out of 60, so you will need to pay a lot.
In the past years, we have seen that is roughly at about 6 to 8%.
So 6 to 8% is the ratio in highways.
Yeah.
While railways is low because of our qualification criteria sometimes doesn't add. Only you are not targeting any projects in the water segment like you are talking about the JVM.
Right now, these are the two state governments which are already now in place. State of Rajasthan, there are almost 15,000 crores of order which could not be awarded earlier by the earlier government, where now they are looking at this opportunity. But definitely we are looking into these two state government, MP and Rajasthan, and third UP, where we would be adding these water sector projects, looking for that. But definitely this year we are not keeping anything because hardly 2 months are there. We are not getting. We will be looking into this. Yeah, sorry.
So next year, how much we are expecting from MP and UP in terms of bids for KGN projects?
Total at HG level, highway and all other projects?
No, sir. You said that water segment, earlier recent scheme, Rajasthan.
At least we would be looking to add at least 500 to 1,000 crores of a single or two projects.
Renewable is going to, you'll be setting up a solar small park and you'll be supplying it to under the Kusum scheme to the farmers, the solar farm. Is that understanding correct?
No. It's not that. Kusum Yojana is where the power purchase agreement, the government is taking back the power and they are being installed near to the grid substation already in operation, say with all Bijli board. So nothing of that here, they will supply to the, but definitely government subsidy scheme is there in that, central government scheme is there, and the power purchase agreement, which normally it's about 2.5 or 2.6 rupees unit. Here it is 3.5 or around 3.5. So there's a good gap in that particular, margins are good.
2.5 is a very good number actually. And the last question on the BOT front, as you said.
Sorry to interrupt, Jiten. I request you to rejoin the queue.
Thanks.
Thank you. Ladies and gentlemen, I request all the participants to limit your questions to 2 per participant. Thank you. The next question is from the line of Abhishek Dixit from Hem Securities. Please go ahead.
Yeah, hi sir. Thanks for taking my question. So sir, my question is that on the consolidated level, what is the reason for dip in the margins in this quarter?
What margin?
The dip in the margins for this quarter, in quarter 3 FY'24.
Consolidated margin. Dip in the margin, in the console level.
Yes, sir.
So I already explained. So this is the effect because of these 3 projects where, say, it's to be very specific in Gurgaon Solar, there is a negative revised margin being there majorly. Because the entire, say, 4 HAM projects where this effective 1.55 times of the investment which we have done. So in SPV, whatever margins we have built up in the last 2-3 years, they are major effect in Gurgaon Solar. But otherwise they are all same.
Okay. And sir, for full FY'24, how much EBITDA margins are we seeing?
For this current year? So
yes, sir, for current year.
You are talking about absolute number or a percentage?
No, sir, percent.
Percent would be roughly around, say, as we are doing it 15.9, roughly it would be in that range only.
Okay, 15%.
Yeah.
Okay, sir. And sir, our major order book is in the road segment. So are we targeting to diversify in more segments?
Which sector?
So our majorly order book is in the road segment. So are we diversifying in more like water, metro projects?
Already we have given the guidance that this year we are having 18% of the orders, balance orders of railway. So other than roads only, and keeping that in line, 25-26, we would be roughly targeting at about 25 to 30% orders from the other sectors other than highway.
Okay. Okay. That's all from my side. Thank you.
Thank you.
Thank you very much. The last question is from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
So just one question. So going forward, so out of your interest cost, let's say 20 crores this quarter, what would be the overall split that we should assume between, financial charges which are levied by the banks and the interest cost? So what would be the split that we should assume in general? And secondly, going forward, given that you have, let's say, around 400 crores net debt on the balance sheet post the receipt of sale proceeds, then what should be the interest cost on a yearly basis?
The interest cost definitely for this particular quarter, as we have seen, that there are a few quarters where the bank charges and commissions are a bit high. In this quarter 3 and quarter 4, normally in the past also we have seen this trend. But overall, if you see the interest portion in 22 crore rupees of this quarter, is around interest on OD, and it's around 10 to 11 crore rupees interest by the client from the client advance. BG commission and these bank charges are a bit high. So this is very high, about say 6 crore rupees. So now looking into that, the entire trend once we receive this roughly around 65 odd crore rupees on year-on-year basis would be the trend of interest on including charges, bank charges, processing fee, BG commission, etc.
Of which around 60% should be the financial cost and remaining would be the charges.
Roughly, you can consider that.
Understood, sir. And on depreciation, should we are at 37 crore on a standalone basis per quarter. So what should be sort of the going forward rate we should assume?
This number is coming around 140 crore rupees, which is likely to reduce because the capex, what we have done in last year and this current 9 months, so the very high capex being done. So this the coming years, this capex is good enough to take the 15 to 20% year-on-year growth, just the 15 to say 70-75 crore rupees of net capex to be done in the next subsequent 2-3 years. So this is going to likely to come down significantly, not in these 2-3 quarters, but definitely later on.
Understood, sir. Thank you and all the best.
Thank you very much. As there are no further questions, I will now like to hand the conference over to management for closing comments.
So I extend my gratitude to everyone who contributing their experience, expertise to the discussion. We value your presence on today's call and trust that we have addressed to all your queries. Should you have any additional questions, please feel free to contact our investor relation advisor, Go India Advisors. Thank you for your active participation once again. Thank you.
On behalf of Go India Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.